S&P's right now still stuck basically right at 59.50. Kevin Green's with us, taking a look at the flows and the technical situation. Kevin, I guess if we were looking for bears to try and hold their downtrend, they're not doing a great job of it, but bulls are kind of frozen too, it seems like today.
Look, let's call it even, because I could come back and say, look, bulls weren't able to have a follow-through day, especially with that candle yesterday, and they were unable to break through that 50-day moving average, but they did utilize the 20-day moving average as an area of support. So if we're looking at the open interest chart, what we actually have developing right now, if we close around these levels, which we do have some pen risk at 59.50 once again today, if we do close at these levels, we actually have a hanging man candle. You could actually say the intermediate trend, or the trend that we have seen over the last couple of trading sessions, is to the upside. Hanging man is usually at the end of a trend, and that's also a reversal candle potentially to be mindful of. Now, what I will say for the bulls, though, is that we actually have another day. We have that MACD at the bottom looking like it's trying to cross. You also have participation in the broader market, and we have options expiration tomorrow. And as your previous guest kind of just talked about, it's going to be the largest one that we've had on record. Obviously, over time, that's going to continue to happen, but this is also a leap expiration. So we have a lot of single stock options that are going to be expiring. We have the E-mini S&P futures and a lot of those futures contracts expiring, the options expiring, the S&P 500 and the index options expiring. There's a lot going on for tomorrow, Oliver. If you want to make a case for the bulls, though, last options expiration this time last year when we had the leap expiration in 2024, market moved up 1.3%. 2023, market moved up 2%. If you're just kind of looking at the past trends on OpEx for January, it has been really actually very bullish, and that could actually break us to the upside here. So going with those prior trends, knowing that we had this consolidation, tried to test the 50-day, held the 20-day for the most part. Yeah, you got kind of a bearish candle that's setting up. You're still in that channel, but tomorrow actually can be the day. And, kind of looking at the past, you kind of hand it a little bit more to the bulls if they're going to be able to pull it off. And if they are going to be able to pull it off and have that 2% or let's say a 1% day for tomorrow, then we actually start looking at a formal breakout of this channel and making higher highs based on the channel, if you will, right?
Yeah, exactly. Breaking out. So the first step, I guess, getting above the high from late last year, start of this year. That candle for the S&P 500 that's, not too far away, obviously. It's still a little bit shy of 6,000. Advanced decline looking pretty good. I guess if we're going by that, then it's assuring for bulls like the MACD too, the potential crossover there. It's nice to have a few things that we can monitor to tell us kind of on the rate of change front which way it's breaking. And so it seems, I guess, on the margin a little bit more bullish perhaps in the near term, but we've also got a clear channel, so we got to respect it.
Yeah, and you got to get tech and communication services to participate just a little bit in order to get that, that nice rally to the upside. And unfortunately, we'll take this aside. If you look at the intraday chart of Apple and that sell-off here today, Oliver, that looked like it was very institutional in nature. The progression of that sell-off, it wasn't really erratic. It was really methodical to the move to the downside. That actually is a little bit concerning for Apple. So you'd like to see a nice little rebound day tomorrow. But if you're going into the close here, once again, 59.50, you're going to have some pen risk. 59.60 going to be your area of resistance. That's your positive gamma for today. Not surprising that we actually did see some areas of resistance sitting around 59.60. That's because we also had that 50-day moving average. Once again, we tested it twice on an intraday basis, failed it. You'd like to see us kind of retest that tomorrow going in for tomorrow for the options expiration. Any formal breakdown of that 59.30 level, that's where you get a little bit concerned that we start trying to test that gap that we had on the S&P 500 for yesterday. And so this is, once again, it's kind of a draw, but if you're kind of looking at the seasonal trends, given the dynamics that we have for tomorrow, knowing that you're going to have a lot of options premium being rolled off here. You have volatility fairly low, so these rolls won't be as aggressive or maybe cause as much of a ripple to the downside for a lot of these institutions. And, that could actually give you a little bit of a bullish spark. If you're going to have one, if you're going to have an event that's going to be bullish for tomorrow, OpEx is going to be the thing for you. And it's not really going to probably happen immediately when the market opens. We have to be mindful of that. Usually these OpEx moves, these 1% and 2% moves, if you go back in time and look at history, a lot of those pops will happen at the last hour, hour and a half of the trading session, that's when you actually start seeing a lot of the trading activity happening in the options and the derivative space.
All right. Good stuff. Good heads up for tomorrow. Still far from over this battle here for this week. Thanks, KG. Good stuff. Good perspective. Market getting pinned at that 59.50.